Well, it's September 2022, and as always, there's a ton of conflicting news and opinions out there about the housing market. So it's time to check in and see what's actually happening with the housing market both nationally and locally here in Spokane. My name is Phil Wells. I'm a Spokane real estate agent that likes to keep up to date with the market, and I want you to be as informed as possible too. In this video, we're going to look at national pending home sales, we're going to look at mortgage rates as well as mortgage application rates. We'll of course look at the Spokane market itself too. We'll then move on to look at some real estate and macroeconomic news that stood out to me this month. And at the end, we'll try and piece all this information together and see if we can make sense of the market as we see it right now in September 2022. So let's get into it. Looking first at national pending home sales, just a note on the figures throughout this entire video. They are the latest figures that are available, but there is often a lag when it comes to reporting these figures, particularly at the national level. For example, the pending home sales figures we're about to look at are from July. We look at pending home sales rather than closed sales because it actually takes a while to close a transaction. So closed sales in July would represent activity back from May and June time, whereas pending home sales in July give us the most up-to-date impression of what the market's doing. Contract signings were down only 1% month over month in July 2022. Year-over-year contract signings declined 19.9%, which represents 14 consecutive months of year-over-year sales declines. Where I am in the western region, sales increased 2.2% month over month, and they declined 30.1% from the prior year. Here's what the National Association of Realtors chief economist had to say. In terms of the current housing cycle, we may be at or close to the bottom in contract signings. This month's very modest decline reflects the recent retreat in mortgage rates. Inventories are growing for homes in the upper price ranges, but limited supply at lower price points is hindering transaction activity. In June, housing affordability plummeted to its lowest level since 1989, according to the National Association of Realtors. Accounting for a 30-year fixed mortgage and a 20% down payment, the monthly mortgage payment on a typical home jumped to $1,944, an increase of 54% or $679 from 1 year ago. Home prices are still rising by double-digit percentages year over year, but annual price appreciation should moderate to the typical rate of 5% by the end of this year and into 2023. With mortgage rates expected to stabilize near 6% alongside steady job creation, home sales should start to rise by early next year. Now, this economist specifically points to mortgage rate retreat as the reason why pending home sales were down so moderately this month. So let's move on to take a look at mortgage rates to see what he means. Sticking with July for a second, mortgage rates at the start of July were at 5.5%, and by the end of July they were at 5.13%. So a definite retreat there in the words of the previous economist. The most recent rates I could see have risen again to 6.12%, so nearly a full 1% gain there in rates since the end of July, squeezing an already heavily squeezed buyer. So I'd expect to see August and September's pending home sales decrease as a result too. The previous economist mentioned that he believes rates will stabilize around the 6% mark, which means we're at the top of rates in his eyes. But with the Fed chairman switching up his rhetoric to now include some pain when talking about dealing with inflation and the recession, I'm not so sure 6% is the ceiling on rates. As I mentioned last video, we are, in my view, in a stagflation type cycle. That's where economic activity decreases, but prices continue to rise. And with inflation currently at 8.5%, I foresee more Fed funds rate increases until such time as they can get inflation down to their 2% target. This will of course cause mortgage rates to increase as a result. I hope this pain that Jerome Powell is talking about comes quick, like ripping off a band-aid, rather than being a drawn-out ordeal that lasts for months or even years. Sticking with mortgages for a second and looking at mortgage application rates. As I always say, it doesn't matter what mortgage rates are, it matters how many people are applying for loans after all. And given that the majority of people buying homes in the United States buy a home with a mortgage, it's a great leading indicator to look at. I wanted to start with a headline for the overall context of applications. This article highlights the fact that mortgage application rates hit a 22-year low on the week ending August 19th, which in combination with the higher rates that we saw in August does not bode well for August's pending home sales figures when they're released next month. Here's what the Mortgage Bankers Association had to say about the current situation in their most recent report for the week ending September 2nd. Mortgage rates moved higher over the course of last week as markets continued to reassess the prospects for the economy and the path of monetary policy, with expectations for short-term rates to move and stay higher for longer. With the 30-year fixed rate rising to the highest level since mid-June, application volumes for both purchase and refinance loans dropped. Recent economic data will likely prevent any significant decline in mortgage rates in the near term, but the strong job market depicted in the August data should support housing demand. There is no sign of a rebound in purchase applications yet, but the robust jobs market and an increase in housing inventories should lead to an eventual increase in purchase activity. So a relatively bleak outlook there from the economist at the Mortgage Bankers Association. But it's worth noting that this is the second economist in this video to reference the strong jobs market as the beacon of hope in this economy right now. Because of this, I'll be keeping a close eye on the jobs figures as they come out. Looking now at my local market, Spokane. These are actual sales for August. Sales were down 14.3% on a year-over-year basis. Median home prices continue to rise on a year-over-year basis. They were up 7.8% when compared to August 2021 and currently sit at $420,000, which is unchanged from last month. It should be said, though, that median home prices have dropped from their highs in May, where they were at $450,000. Now, is this just seasonality, or is this a sign that prices are beginning to come down overall? In my view, it's far too early to tell. We'll have to look to see when year-over-year price figures start to come down, if they do at all. Inventory is holding steady at a 1.7-month supply for the second month in a row. It's worth mentioning that a balanced market would look something like a 3 to 6 month supply, so that gives you some perspective and goes to show that we're not over the low inventory phenomenon just yet. When compared to those May highs, the median days on market has increased from 4 days to 14 days, which goes some way to explaining the welcome inventory increase. New listings are down marginally on a year-over-year basis, but the difference is only 14 homes, so I'd say new listings are level from last year. Now I wanted to move on to look at some real estate and macroeconomic news that stood out to me this month. I do this section because news articles are a great way of framing the data. Data alone doesn't tell a story, it needs context. Looking at this first article now. Now we know there's a business cycle recession, but is there a housing market recession? This article from Fox Business seems to have the answer. Painfully high inflation and rising borrowing costs have proven to be a lethal combination for the housing market, forcing potential buyers to pull back on spending. A slew of new economic data published earlier this month shows the sector is starting to slow considerably. Home builders' sentiment about the industry plunged to the lowest level in 2 years, and buyers are retreating from the market as they cancel home sales at the fastest pace since 2020. And home builders are rethinking construction. We're witnessing a housing recession in terms of declining home sales and home building, the National Association of Realtors chief economist said. The article goes on to draw a distinction between how the current housing market is affecting buyers and sellers differently, and frames low supply as the anomaly that keeps prices high despite a downturn in buyer demand. The same economist says that it's not a recession in home prices. Inventory remains tight and prices continue to rise nationally, with nearly 40% of homes still commanding full list price. So it's an interesting article, but it has to be said that pending home sales have been declining now for 14 months, and we've known that the US has been short several million homes for some years now. So why are we suddenly now in a housing recession? The only difference now is that buyers seem to be getting nervous, and it's that sentiment that's causing this outlet to conclude we're in a housing recession. And there is a real concern out there that home prices are going to come down and are going to come down quickly. And people right now just aren't prepared to overpay, whether that's to pay an overly inflated home price or their inflated mortgage. But the reason for that sentiment is clear to me. It's interest rates. Mortgage rates are too high and monthly mortgage payments are too high as a result. The real test will come if and when inflation comes under control and rates can begin to fall. Will buyer demand pick up then? Or are we truly in a housing recession? So let's see what's happening with prices right now. I know a lot of people are nervous about that. I've been having this conversation with some of my buyers too. But that previous article references the National Association of Realtors, saying that 40% of homes are still commanding their full list price. And we've seen here in Spokane that year over year, home prices are still up 7.8%, but have declined month over month since their highs in May. According to this article, home prices declined 0.77% from June to July, the first monthly fall in nearly 3 years, according to Black Knight, which is a mortgage software and data analytics firm. While the drop may seem small, it's the largest single-month decline in prices since January 2011. According to them, the fast and sharp rise in mortgage rates this year caused an already pricey housing market to become even less affordable. Home prices rose sharply during the first years of the COVID pandemic because demand was incredibly strong, supply historically weak, and mortgage rates set more than a dozen record lows. Now, no market update would be complete without some conflicting information. Because, after all, I just report what I see, I don't try to sway your opinion in any one way. I'll let you make your own determinations. Looking now at this infographic from Keeping Current Matters, claiming that we're still in a seller's market. They say that while buyer demand has moderated, the housing supply has grown in recent months. It's still a seller's market because of low inventory. The latest data shows that sellers continue to benefit from serious buyers and competitive offers. In July, the average home received 2.8 offers, and 39% sold over asking. I must say that I believe we're in a neutral balanced territory right now, not a buyer or a seller's market. This infographic is right that there is very short supply. But as we saw in the Fox Business article, buyers right now have the boot of the Federal Reserve on them, causing buyer demand to wane considerably. It's been my experience recently that homes that are very desirable and that are priced right are still attracting a good amount of attention, and there's a potential there for multiple bids. While homes that are either poorly priced or are just less desirable are receiving below list bids and concessions on top. Now let's try piece all this information together and see if we can summarize the market as we see it right now in September 2022. The big news is that interest rates are still too high around the 6% mark. Inflation is way too high in the mid-8s. We are officially in a recession, and some would argue we're in a housing recession too. The most recent national pending home sales are down marginally, and there's evidence that home prices are down marginally on a national basis too. And while inventory is coming online, we still do have an inventory shortage. In terms of Spokane specifically, sales are down here in Spokane, and we continue to see low inventory. But new listings are holding steady, and we continue to see inventory holding above a 1-month supply, which is certainly progress. Prices here in Spokane are up on a year-over-year basis, though they have come down some on a month-over-month basis from their highs in May. Whether that's just a seasonal norm or signs of a larger price downturn, it's too early to tell. The playing field and the game of buyers versus sellers has definitely leveled. I'm noticing in my own business that the idea of bidding at ask or even below ask is no longer a laughable concept, it's actually a real consideration. So if you're a buyer right now that can stomach the current rates in the anticipation that you'll be able to refinance at some point in the future, then now is actually a great time to buy. You're likely to get a good price on your home and maybe some concessions along the way too. If you're a seller, know that home prices are still rising on a year-over-year basis, but you will have to put effort in to prep your home properly for sale, and above all, price it right. You'll also have to come up with a real strategy before you list that may include aggressive price drops in order to sell your home. That's it for this video. I hope you gained from this video. If you did, please like and subscribe. That really does help me out. If you are looking at buying a home or selling a home in the Spokane area, then please reach out to me and I would be honored to work with you. Just give me a call, shoot me a text, or send me an email. Like I said, my name is Phil Wells, and thank you for watching.